information, analytics, and cybersecurity services to your business, keeping your data safe. Since our inception, we have trained thousands of participants among the investing public, financial professionals, hundreds of B2B clients, and have continued to forge strong business partners. To find out more about what we do and how we can help you, contact us today. Cybercode is a leading financial training provider and a leading developer of information technology solutions and management services.
The Institute of Banking and Finance, or IBF, was established to foster and develop the professional competencies of the financial sector. IBF is dedicated to empowering practitioners with capabilities to support the growth of the Asian financial industry. It is the national accreditation and certification agency for financial sector competency. Developed by the industry for the industry, IBF Standards is a set of competency standards benchmarked to international best practices. IBF's vision is to be the Asian standard of excellence for practitioners in finance. IBF Standards covers 13 industry segments and offers a wide range of development roadmaps. IBF Standards offers accredited programs to guide a financial practitioner from licensing examinations to professional certification. IBF Standards certifies financial practitioners at 3 levels. An IBF qualified individual is one who is equipped with a broad base of capabilities and foundational competencies to undertake new roles. An IBF advanced individual is one who has acquired applied knowledge and complex analytical skills for specialists or leadership functions. An IBF fellow is an industry veteran who has demonstrated professional mastery and exemplifies thought leadership and commitment to industry. The IBF certification mark, a set of parallel elevation bars, symbolizes the close partnership between IBF and the industry. IBF certification is therefore an industry-endorsed mark of quality that recognizes individuals who exhibit professional excellence, integrity, and commitment to the industry. Be part of the IBF community of certified financial practitioners. Participate in continuing professional development programs. Avail yourself to learning resources to plan your career. There are also opportunities for mentoring and networking. IBF, the Asian standard of excellence for practitioners in finance. The Institute of Banking and Finance, or IBF, was established to foster and develop the professional competencies of the financial sector. IBF is dedicated to empowering practitioners with capabilities to support the growth of the Asian financial industry. It is the national accreditation and certification agency for financial sector competency. Developed by the industry for the industry, IBF Standards is a set of competency standards benchmarked to international best practices. IBF's vision is to be the Asian standard of excellence for practitioners in finance. IBF Standards covers 13 industry segments and offers a wide range of development roadmaps. IBF Standards offers accredited programs to guide a financial practitioner from licensing examinations to professional certification. IBF Standards certifies financial practitioners at 3 levels. An IBF qualified individual is one who is equipped with a broad base of capabilities and foundational competencies to undertake new roles. An IBF advanced individual is one who has acquired applied knowledge and complex analytical skills for specialists or leadership functions. An IBF fellow is an industry veteran who has demonstrated professional mastery and exemplifies thought leadership and commitment to industry. The IBF certification mark, a set of parallel elevation bars, symbolizes the close partnership between IBF and the industry. IBF certification is therefore an industry-endorsed mark of quality that recognizes individuals who exhibit professional excellence, integrity, and commitment to the industry. Be part of the IBF community of certified financial practitioners. Participate in continuing professional development programs. Avail yourself to learning resources to plan your career. There are also opportunities for mentoring and networking. IBF, the Asian standard of excellence for practitioners in finance.
The digital world is ever changing. With more than 20 years of experience in serving the investing public and the financial services industry, Cybercode has been providing financial training and information technology solutions for established clients. Cybercode is based in Singapore with 7 offices around the globe and continually expanding. Being ISO 27001 certified and having a proven reputation for service excellence, Cybercode endeavors to build long-term relationships with customers and business partners alike. Our services include, but not limited to, the following: investing public, to provide training programs to the public, such as investment and stock trading courses. Financial professionals, providing up-to-date training courses for the finance professionals, keeping them well informed with compliance, regulatory requirements, financial products, and best practices. Financial technology. We develop and provide information technology solutions and management services curated specifically for our clients' needs. Cybersecurity and data. We provide data, information, analytics, and cybersecurity services to your business, keeping your data safe. Since our inception, we have trained thousands of participants among the investing public, financial professionals, hundreds of B2B clients, and have continued to forge strong business partners. To find out more about what we do and how we can help you, contact us today. Cybercode is a leading financial training provider and a leading developer of information technology solutions and management services.
Hello, good evening, ladies and gentlemen. Sorry. Hi. Good evening, ladies and gentlemen. Thank you for tuning in for this evening live webinar. The comparison between data center REITs wish to invest in, a big question mark, by our keynote speaker, Darren Chu, the Financial Services Director with Philip Wealth and Advisory Department. Now, before I pass the mic over to the Darren Chu, now let me do a short introduction of company, myself, as well as the Darren himself. Of course, for those who join in today, this evening session, thank you very much for taking this time joining in. Now, indeed, what you can see the video earlier on, one of the video called IBF Institute Banking or Finance. Now, indeed, Darren Chu also more one of the course called Lifetime Income Mastery course is IBF accreditation course up to 90% subsidy by IBF. So I think towards the end of the session, Darren, we're going to share with you how he benefit a lot of individuals who are going through for this course, right? Now, of course, today as well, those also, we have 2 connections here today. We have individual who view from this Facebook, YouTube viewers. Basically, you can always post a question into the chats column, and of course, individual who view through the Zoom individual. Basically, what you can do, you also can post a question into the Q&A column, right? Of course, a little bit sharing with Darren. Now, basically, Darren start off as a stockbroker advisors, and indeed, he also one of the very unique individual with the other 3 partners who are running a satellite office, one part of the Singapore. And under his wing, he have more than 30 over trading rep as well as financial advisors under his wing, right? And managing a pool of his client as well as a financial advisor and the trading representative. So indeed, today we are fortunate to have him, to Darren, come here to share with you today's topic, a comparison between data center REITs, right? So I think without much delay, I think cautiously invite Darren to take over from here, right? Darren, please.
Okay, thank you, Andy. Okay, good evening, everybody. Hope you are taking a dinner already. Okay, now let me just get things started. Okay, before I start, just a simple introduction about me. Okay, I'm Darren Chu. Actually, my team actually operate the Investor Center at Jurong East. Okay, now actually is situated at the Westgate Tower level 10. Okay, this is a newly opened center, but unfortunately, it's COVID period. So for those who want to visit us, you need to make an appointment, then you can come and see us. Okay, I'm also a trainer for IBF accredited program, where actually I run this flagship course called the Lifetime Income Mastery. And for this year, there's left 2 more runs, and 90% course funding will end by this year. Next year, the funding should reduce Okay, cannot be the funding every year with 90%. So this will be the last 2 run, okay, on 90% free funding of the cost. Okay, I also have my own YouTube channel, okay, called Darren Chu. Actually, this channel is set up to support the course graduate, as what I post there is actually all related to the course. Okay, so it's more like a revision for them, and so for the course participant to get in touch with them, because they can post question there on the video, and I will answer them along the way. And I also just set up a Facebook page also, is to connect with the participant also. You all can also go and like the Facebook. So along the way, if I got any webinar, I'll just post it there, and also any YouTube video I post it there, so you all can also go and take a look on that. Okay. So this is summary of me. This is my 15 year, I think it's 16 years already, coming to 16 years next month. Okay, in this financial services industry, I'm currently the financial services director, okay, taking charge of the investor center at the Jurong East. Okay, and our team have started with 4 of us when we opened the center. Now it's close to 30 of us. So anyone that want to explore this industry also can come and look for me. Just some background. Actually, I have worked as an engineer for 10 years. Okay, after working as engineer for 10, then I made a career switch to this industry. So now I'm 16, going to 16 years in this industry already. So roughly you can guess how old I am. Okay, so for those that want to explore this industry, can explore this industry, can also talk to me about that. Okay, so now let's talk about today's topic. Okay, today we're going to talk about data center REITs. Okay, data center REITs. And I believe most of you will know what is data center REITs. Okay. But before I jump into data center REITs, maybe I just want to talk about what is REITs. Okay, along the way, you all have any question, okay, can just type on the Q&A side, but please leave your name, don't put anonymous. Okay, at least I know who is asking the question. Okay, so I can address to it also. But please ask question related to today's topic. Okay, please. So you can just type on that. For those on the YouTube channel, you can just type on the YouTube chat there. I'll also check on that. Okay, so I'll just answer your question along the way rather than finish already, then I answer. Okay, then at the point in time, we may run out of time also. Okay, so before I talk about data center, for the benefit of those that are very new to investment, I just have a very simple introduction of what is actually a REITs is. Okay, so a REITs in a simple nutshell is called a collective investment scheme. Okay, it is a asset class that formed to buy properties. Okay, so what does that mean? That is collective investment scheme means that they must have investor, okay, invest money to who? To someone we call a risk manager. Okay, so a risk manager is not an entrepreneur really. It's someone that work and manage the property thing. So the risk manager collect money from the investor, and at the same time they go bank to borrow the money. And what they do, they go and buy physical property. So do take note, REITs have to buy physical properties. That is the mandate of the REITs. The REITs manager cannot go and buy any other thing except the physical properties. Okay, so after they buy a physical property, usually they'll buy mature property. They don't buy TOP properties, or they don't buy property under construction. Okay, so this is something you also need to take note of. That is why they need to buy a mature property. Is after they buy it, immediately they got rental income. Okay, if they buy a property just TOP, no tenant one, then they need to go and canvas for tenant. Or if they buy a property under construction, they take our money, go and invest in the end, tell us, sorry, we have to wait 3 years, then got dividends. Okay, so this one don't make sense. Okay, so this risk manager will fire in the AGM. So what they need to do, they need to buy existing property, they already have tenant, then they buy over immediately, we got rental income. Then after that, then they need to find ways and means to improve the rental income. Okay, so this is what the risk manager do. Okay, when they collect the income, what they need to do, they need to pay the bank first. But a bit different is they only pay the bank interest. They don't pay the bank principal. So this is what the risk manager do. They collect the rental income already minus off their fees. Okay, the risk manager charge you a fee. Okay, and after they also need to pay bank interest, and the balance will be given to us as dividends. Okay, so they don't pay principal. It's different from you and me going to buy properties. When you rent it out, we need to pay back the bank, the interest and the principal. Then we call amortization. But for REITs, the loan is always there. They will never take our rental income to pay the loans. Okay, so this one thing you need to take note. And thus, then we have dividends. if they were to pay the loan, maybe we don't even get any dividend. Maybe it can be negative cash flow. That's why we're also not sure. Okay, so this will not happen for all the REITs. So indirectly means what? The REITs have to be constantly on debt. Okay, have to be constant on debt. So this is what a REIT is. So if you are someone that don't like to leverage, don't like to be on debt, then mainly think twice of do you want to invest in REITs? Because a REIT is definitely on debt and definitely on leverage. But some people say I don't like to be on debt leverage, but other people leverage, I don't mind. So I buy the REITs because it's the risk manager that leverage on that. Okay, so depend on how we want to look at it. Okay, next, let's talk about what are the REITs available in Singapore. We have the retail REITs. Okay, we have the office and commercial, the hospitality, we got the industrial, we got the specialized REITs, we got diversified REITs, and we got the healthcare REITs. So today we're going to zoom into data center. So data center REITs, actually we know that there's this REIT called Capital DC, okay, which is called a specialized REITs, correct? Okay, but actually data center REITs indirectly, a broader classification, they are called industrial REITs. Data center is a subset of industrial REITs. Okay, so this is what we need to take note of that. And thus, other REITs also start to have data centers. Okay, and actually before Capital DC come out, other REITs already have data center. It's just that it's a small percentage that people may not even notice it. Okay, not notice it. So let's look at all the various industrial REITs. So this is the 10 industrial related REITs that is listed in Singapore. Sooner or later, we only will become 9. Why? I think everyone should help the news that this is AIA logos going to be marked over by ESR. Okay, ESR going to buy over AIA logo. So this will be removed. So we're left. So actually, they also want to merge with this, but still cannot go through during the EGM. So now they'll buy over this AI. So we're only going to have 9 industrial REITs left. Okay, so these are all the 9 industrial REITs, and we can see that we have C Fraser Logistics and Commercial Trust. This is Logistics and Commercial Trust because it's a merger of Fraser Logistics Trust and Fraser Commercial Trust together. So this is a logistic REITs coupled with some office building. So it's a 2-in-1 thing. Okay, so this is what we have in the thing. And by rule of elimination, okay, you want to look at data center, right? So a logistics REIT unlikely to have data centers. Okay, because they tell you what they do logistics. So this is unlikely to have data center, and this is unlikely to have data center, and this is unlikely to have center currently, yeah. But they may change their mandate along the way. So never say never. So, but this is current. So left the rest have a potential to able to acquire data center beside Capital DC. Okay, and let's look at industrial REITs performance. Okay, this is the industrial performance, 3-year industrial performance. Based on, okay, sorry, I forgot to update the date. This is not August. Okay, this is 30th of September. Okay, even earlier, even more updated. 30th September, fresh from the oven. SGX just updated this, I think, few days ago only. So I just got the data. So I updated the data, but I forgot to update the date here. Okay, I apologize for that. So you can see for past 3-year performance, who have the best? Capital DC. Okay, Capital DC have the best performance. Do take note, this is total annualized return. So what does total annualized return means? That is capital gain, okay, or loss. Okay, can be loss also, plus dividend collected. Okay, plus dividend collected. Okay, some of you say I buy REITs for dividend, but do think that you may lose money. So capital gain plus dividend collected. So Capital DC is number 1. Okay, for the past 3 years. Although a lot of people say Capital DC this year dropped double digit. Yeah, Capital DC this year is one of the worst performing REITs now. Okay, but despite being the one of worst performing REITs, if you hold this Capital DC for the past 3 years ago, you make 27.6% return per year. Okay, per year return. Okay, followed by number 2 is Mapletree Logistics. Okay, Mapletree Logistics is number 2. Okay, and then the logistics Fraser is number 2. So let's look longer. A lot of people say I want to invest, I invest for the longer term. Okay, so 5 years. It's still the same. The top 3 is still remain the same. Capital DC is number 1, 21%. Okay, in 5 years, when the average out, the percentage will be lower for Capital DC. Mapletree Logistics 20%. Fraser is 16%. Maple Tree Industrial Trust is 15%. So you can see double-digit returns rate actually got 4. Okay, what do I mean by 4? I mean, you buy this REIT for 5 years. Actually, these are 4 REITs that give you double-digit returns year on year. Okay, and without you doing anything, you just buy the REITs and hold. Okay, so this is what the performance. And unfortunately, we don't see any REITs that any industrial REIT that give us negative returns. Okay, over the past 5 years. Other sector, like for example, retail REITs, okay, for example, like hospitality REITs, and they will actually healthcare REITs, they actually give you negative returns over 5 years period. What does it mean? It means that you buy the REITs and you plan to collect dividend. 5 years later, today, now you realize that, after I collected dividend, actually I lose money. Okay, so this is what I call negative returns. Okay, but fortunately, all the industry, even the worst one, ESR still give 4.3. Okay, so this is what the industrial rate is. And I personally foresee that industrial REITs will still be one of the stronger REITs among all the REIT sector going forward in the next few years to come. Okay, especially data center REITs. Okay, especially data center. So when I talk about industrial REITs, what type of property are we looking at when I want to look at industries? So these are the thing that you will want to focus on when you want to buy industry. So all those industry, you're going to look at it, what are their focus on? If they are focused on logistics, e-commerce, then this will have a growth potential in the near future. And we know that e-commerce will be the in thing, and it's already the in thing now. Okay, and next is business park. Okay, business park is also another growing thing in the industrial park. And then last one is high specification industry or data center. So what does high specification industry mean? We are looking at precision engineering companies. Okay, we are not looking at those JTP manufacturing plants. Okay, we are looking at precision, and these are something related to what in Singapore context mainly will be the semiconductor industry. Okay, the semiconductor industry, the wafer industry. So this is what we are looking at called a high specification industrial building. And of course, the next one is data center. Okay, so this is what you will want to focus on. You want to buy industrial REITs, then you need to look at their properties. What business are they doing? If they are still focused on all those JTC manufacturing plant, all this, then maybe you want to move on to look at other type of industrial REITs. Okay, so this is what you may want to take note of. Okay, so now let's talk about the data center REIT. So the first data center REIT I'm going to talk about is definitely Keppel DC. Okay, it's a name that everyone will know. And when talk about data center, people always say Keppel DC, Keppel DC. Okay, and what actually Keppel DC is? Okay, the number is constantly jumping. You look at property, all this number they will update it every 6 months or every 3 months. But currently, how many data center Keppel DC have? Okay, it's around 19 data center. Okay, Keppel DC now got around 19 data center under them. Okay, and even I show you this slide, it's already not outdated already. Okay, because it is very dynamic. Okay, data. For example, they have already sold off a data center in they sold off one data center here already. Okay, in Australia. Okay, but I think they just bought 2 data center in Netherlands. So it's very dynamic, but ultimately what we want is the data center, the number of property a REIT hold must increase over time. Okay, that's the first criteria. You buy a REIT and you see the property keep on, the number quantity never increase and drop, that is also a red flag. That's a red flag. When you buy a REIT, the property need to keep on increasing one. Okay, so that is an underlying thing of buying REITs. Okay, it is always to the interest of the REIT manager to increase property, because their salary is back to how many property they have or AUM they have. Okay, whether the property can generate positive return to the investor is secondary, but their basic income is always back to properties for most of the REITs. So the more property they have, the higher basic pay they have. Okay, so this is what a REIT is. So this Keppel DC, you can see that they have data center in Europe, Malaysia, Singapore, Australia, and China, which is their new venture. Okay, and so when you always look at REITs, you always look at their balance sheets. Okay, but I just want to emphasize on this thing called premium to NAV. Okay, premium to NAV. What is the net asset value of Keppel DC? 121. This is based on 30th of June. Okay, because now they update every 6 months. What is Keppel DC share price now? It's around $2.36. Okay, it dropped a lot already. It dropped a lot. Okay, as of 31st of December, the NAV is 119. So we can see the NAV increase. And when you look for REITs, you want the NAV to keep on increasing. Okay, so this is one criteria. But at the point of time of December, they are trading at 136% premium to the NAV. At June, it dropped to 105. At today, I think it dropped lower. Okay, it dropped even lower, but it's still maybe 80 to 90%. I didn't go and calculate it. Okay. Okay, do take note. You will not expect if Keppel DC here not become a premium, it become a discount to NAV. Maybe that's the time you should not buy Keppel DC. A lot of people say, oh, Keppel DC is expensive. Okay, wait for them to go discount. When it's discount to NAV, normal market condition, then maybe that's the time you should not buy Keppel DC. Okay, data center should be the in thing, should be the go for thing, and thus they should be trading constantly at premium. Okay, just how much premium only. Okay, so this is something to take note of that. If you go to discount, that means Keppel DC downfall it come already. So better run. Okay, this is my personal view. So please don't expect the discount to happen to Keppel DC in the near term. Okay, by right, they're supposed to trade constantly at a premium. Okay, for Keppel DC REITs, as fundamentally they are quite a good REITs in this. Usually a good REITs will always trade in premium. Not so good REITs will always trade at a discount for normal thing. So please don't think discount is cheap, because discount is buying things that people don't want. Okay, so premium is good, thus people willing to pay more to buy. Okay, so this is something you need to take note when buying REITs. Okay, and let's look at Keppel DC performance. When talk about REITs, one of the key part we talk about REITs, you just need to look at their dividend. We are not looking at how much dividend we're going to collect. We want to focus on the dividend trend. Okay, the dividend trend. As the dividend trend will always back to share price. If you buy a REIT, their dividend will constantly go up year on year. It will tell you that their share price, okay, will definitely also go up year on year. Okay, it is always correlated. So what does it mean? When you buy a REIT with the increasing dividend, you will also have an increasing share price. You will make two gains with a dividend inflation hedge plus price appreciation. Okay, so you make the best of both worlds. Okay, and this is what Keppel DC is. But you can see from 19 to 20, they suddenly have a big jump. Okay, suddenly have a big jump. So this is what there is a big jump. So actually, when you see a big jump, don't be too happy also. Okay, but human make expectation. If it slowly climb, I think everyone is happy. But there's a big jump. Human make expectation. Well, now this year will be another big jump or not? What happened? Don't have. Okay, although it grew up, so people may not be that happy. Okay, and unlikely, I don't think there will be a very big jump. Okay, will definitely be increased. We can see that first half year is at 4.9. If you multiply by 2, you see the second half have to be more than the first half. So maybe it should be around 9.8. So it will still be increasing. So Keppel DC is an increasing dividend REITs. Okay, so this is a key part. It's an increasing dividend REITs. And this is what we want to do it. Okay, I want to buy. And the next part, we want to also look at, as I mentioned, growth potential. So one thing not so good about Keppel DC is last year, during the COVID period, okay, until 1 year now, okay, more than 1 over year now, that Keppel DC didn't buy any properties. Okay, didn't buy any data center in the last 1 year. Okay, COVID to early this year, they didn't do any purchase compared to other REITs that aggressively go around to go and shop for good deals. Okay, because a lot of companies cannot survive, property value drop, so it's a good deal for them. But Keppel DC didn't manage to go and secure any properties. Okay, but a consolation is, despite never secure any properties, their dividends to go up. Okay, so this is the organic growth dividend growth, but they don't have the inorganic growth in last year. So this is something that I'm not so comfortable with. Where why other people can go and buy properties, but Keppel DC can't buy. Okay, so it reflects sometimes about the sponsor and also the risk manager. Why they can't buy a properties in one whole year during the COVID period? Okay, they say cannot travel, cannot visit, but other risks also the same. But how come they can buy properties and Keppel DC cannot? So this is one thing you need to think note on that. Okay, and finally, they make some progress and early this year, and they say that they finally able to buy data center at Guangdong, China. Okay, so they start to explore into a new market, which is China market. Okay, so they're buying into something that they don't know. Okay, they never went before too. Just like you want to go overseas, you want to go to a country that never go there and do business there. So Keppel DC is making a maiden entry into China market, which actually they didn't have exposure to also. So this is a risk thing you need to take note because they don't know about China market. Okay, I don't know how good their sponsor know about that. Okay, their sponsor is Keppel AT&T. Okay, on that, so they buy into a China market and also with the potential to buy another 5 data center, means that they can total will potential to have 6 data center in China over the next few years. Okay, over the next few years. But do take note that how to buy data center, definitely they will need to do equity fundraising. So this is for those that hold Keppel DC, just need to be aware. If they unlikely they'll buy these 6 data center without asking investor for money. Unlikely. Okay. Sure got more or less they'll ask, but just how much you ask. So this is something you need to think, especially for retirees. If they go to go and acquire the other 5, most likely they'll ask you for money. Okay, so but that is another thing when you invest in REITs. Okay, next after that they make another thing is they go and go to Netherlands to buy another 2 more properties. Okay, 2 more properties. So by doing this, actually they do a fundraising. I think some of you know they do a private placement. For this time round, they didn't ask investor for money, they asked institutional for money to secure all these things. Okay, so at least you can see they are still buying. But before that, is this year, early this year, Keppel DC have mentioned that they changed their investment mandate. Okay, have changed their investment mandate. They have started to do things a risk, as I mentioned, their focus is buying what? Physical property, correct rental. That is what a REIT is supposed to do. Okay, but they have changed their mandate to say that they can buy anything that is not properties. Okay, not properties. Okay, but they say it's related to data center. So this is something that they changed the mandate in April. Okay, and they signed MOU at M1. And after that, I think this news, everyone will know that now they go and invest into M1 asset. Okay, invest in the M1 asset to buy their bond, buy the preference share of a new company set up by M1. Okay, and buy the asset. Okay, so and they collect interest. So this is something although they tell you it's a yield accretive investment, although it's a yield accretive investment, correct? Okay, and the next question you need to ask yourself, what does this got to do with data center? Okay, what does this got to do with risk manager? A risk manager is supposed to buy bonds, buy property. Now they go and buy bonds, buy shares. Okay, so although they say they should not be more than 10%, so although it is benefit to investor to be yield accretive, but actually what is the motive behind that? Okay, so that one, is it to benefit Keppel Corp more? And I look at actually Keppel Corp benefit a lot from that. Okay, but Keppel Corp really benefit a lot from that. But is it on the expense of rich investor? So this is something you need to take note. Although investor get more dividends, okay, although investor get more dividends. So this is something you may want to take note of what Keppel DC have done. So if they've done it once, will they do it second time? Will they take third time? Or are they facing challenge on acquiring data center? Okay, so this is another thing on that because they are mainly say that they are data center rich. So this is one thing you need to take note of. Okay, there is a YouTube question. Okay, what is the share price of recent drop? Okay, actually Keppel DC have been dropping since along the year. As I mentioned, first thing they didn't buy any data center for the past 1 year. Okay, and when other people start to buy and expanding aggressively, and after April, they start to change the mandate to deviate from buying data center. So people start to think, what are they trying to do? So indirectly, it caused a sell down on Keppel DC along the way. So people, because they don't seem to have a direction going forward. Okay, another reason is the price have go up so highly. So since they got this type of reason come up, people take an excuse to dump their share price. Okay, to take profit out from that. And currently they are still very weak. Okay, some people may like this because they say got accretive. Some people will don't like it because they seem to deviate from what they want. Okay, this also indirectly explain why there is a weakness in Keppel DC share price. Okay, and next is competition. Okay, competition coming where I'm going to talk about next is what if you don't want to buy Keppel DC, you want to invest in data center and you don't want to buy Keppel DC, what alternative do you have? Okay, so we are going to look at other risks from that. Okay, so this is the Keppel DC share price. You can see that actually from the peak of last year, September, it has started to go down. From here, they hit the new peak in early this year and it started to drop all the way from $3 now to $2.36. Okay, so this is what Keppel DC is. It even dropped below the pre-COVID level. Okay, it even dropped below the pre-COVID level already. But nevertheless, if you buy Keppel DC 5 years ago, you still make 20%. Okay, but their share price is weak. So we'll need to, people start to observe what Keppel DC going forward going to do. How are they going to transform this REITs going forward? Okay, the current news actually is not a good news to Keppel DC. Okay, and also competition. So what is the competition we look at? We're going to look at other REITs that also go into the data center market. So this is another REIT, okay, which is called the Mapletree Industrial Trust. I think the name, everyone should be familiar with this REITs, okay. Mapletree Industrial Trust. As I show you the 3 and 5 year performance, they are ranked number 4. Okay, in terms of returns, why they are ranked number 4, they lose to their sister company called Mapletree Logistics Trust. They lose to Phaser Logistics. They lose to Keppel DC. They are ranked number 4. But I look at a longer time frame, 10 years time frame. Mapletree Industrial Trust is the best performance REITs. Okay, it's the best performance REITs. That means if you hold this REIT for 10 years, this REIT is number 1 in terms of total returns. That means you buy 10 years ago, you buy a shake leg and wait until today, you see that my district is the best performance. Okay, and the return, the dividend you collected is your is more than, if you buy from IPO, the dividend you collected is more than the capital you put in. Okay, so whatever now in the market is purely 100% profits. Okay, the share price, the value is 100% your profits, and the dividend is also some profit because you get more than what you pay. So this is Mapletree Industrial Trust. We have a very, very good track record and a longer term track record. You have a longer history than Keppel DC. Keppel DC indirectly considered quite a young REIT because it's only 5 to 6 years old. Okay, but Mapletree Industrial Trust is very more than 10 years old. And this is what Mapletree Industrial Trust is. Okay, and this is outdated data. We will only have the official updated data next week when they announce the result. Okay, so please bear with me. I don't have updated data now. As they don't, I even email to them, they can't provide me because they need to have an official announcement, then they can give. Okay, so they have actually more than 114 properties. There are more than 114 properties. Okay, later I talk about what other additional property they have. And currently their size is about 6.7 billion. Okay, this is outdated. Actually, their assets should be 8.6 billion. Okay, not 6 point something, 8.6 billion. Why 8.6 billion? As they had acquired another 29 data center in July. Okay, June they announced the result. July they complete acquisition of 29 data center. So you can see they are 8.6 billion. Keppel DC AUM is how much? Okay, 3 billion. Okay, this one 8.6. Okay, and data center contribute how much? 53.6% of the REITs. On top of that, they got high-tech building, as I mentioned, that high-tech building more towards semicon, all this industry, they contribute another 16%. So actually the data center and the high-tech side is actually the main bulk of these REITs. It contributes close to 2/3 Actually, more than 2/3 of the contribution. And then look at the data center asset is 4.6 billion. Okay, the number of data center in the value is already bigger than Keppel DC by 50%. Okay, bigger than Keppel DC by 50%, not by 1%, 2%. It's 50% bigger than the data center itself. Okay, and this is the 29 data center. And where are their data center located? Okay, this is the data center, the newly acquired one. So this is all the data center. The data center are mainly located in US. Okay, so they do 3 acquisitions. Okay, 13. You can see it's 13, 15, and 29. So total is how many? 57 data center. So remember, Keppel DC got how many data center? 19. They've been around for what? 6 years. Okay. MIT have been around for more than 10 years. But when they start to enter into the data center market, maybe around 2017 to 18, that period, then they start to enter the data center market. But look at one purchase 15 data center, one purchase 13, one purchase 29. So they don't buy, they are not like Keppel DC, buy data center one at the time. Okay, so that at one time they really snap up more than 10 data center at one go. So practically they have done 3 data center purchase in US, and then they have grown to 57 data centers. Okay, and they don't have experience on US market also, just like Keppel DC go to China, we are experienced. Then how could Maple Tree Industrial Trust? Maple Tree Industrial Trust, before they go to US, it is a pure Singapore play REITs. What do you mean by that? They only have industrial building in Singapore. I think the manager never even go to US before. Okay, or not. Okay, so why they can aggressively just over the few years period acquire 57 data center in US? Okay, one key criteria is because sponsor. So sponsor play a key part. The sponsor is Maple Tree, which is indirectly called Temasek. Okay, because Maple Tree is 100% owned by Temasek. Okay, so and Keppel Corp is only 50% owned by Temasek. Okay, Maple Tree is 100% owned by Temasek. So and Maple Tree got offices in US, and actually all the deal is secured by the sponsor, not by the risk manager. Okay, so this is why when you buy REITs, sponsor is very important for the REITs to grow. Okay, on top of that, actually they are not new to data center. They actually have 4 data centers in Singapore. Actually, they have 5. They are sold off 1, okay, to Ellipsis. If I'm not wrong, it's Ellipsis. So they have 4 data centers. So they not say that they don't have data center experience. They are managing data center in Singapore and they are managing 4. Okay, but it's just that they don't have exposure to the US market. Okay, so they went to US that one. Now they got, so plus the 4 data center in Singapore total, they have 61 data center. Okay, so in terms of size, Keppel DC 19. So there are 3 times in terms of quantity of data center. So this is one thing you need to take note of. Okay, so when talk about data center, please just don't think of Keppel DC. You also not think of Maple Tree. Maple Tree is an alternative to Keppel DC now in terms of data center aspect. Okay, and what about dividend growth? So you can see that dividend growth, it is, as I mentioned, it is on uptrend and it got a longer track record on that. Okay, I just want to emphasize on this one. This is first quarter F121. Okay, I didn't put the Q21. Okay, it's $3.55. Okay, so one quarter they paid $3.55. You go and look at when the IPO that year. This is 3.55 cents, not $3, 3.55 cents. Sorry. Again, this is 3.45 cents. Okay, a lot of people say, hey, only 0.10 cents different only what after over 10 years. Okay, but do take note, this is 2 quarter dividends. And this is 1 quarter dividend. Okay, so this is a different. The number looks nothing different, but this is 2 quarter. This is 6 months of dividend, and this is only 3 months. So imagine you buy this REIT and you hold after so many years already. The dividend you get this quarter is equivalent to the IPO time 2 quarter of dividends. So this is what I call dividend growth. Okay, dividend growth. So you want to buy a REITs that can do that, give you that type of dividend growth over time. It's definitely cannot be 1 year, 2 year, it need a while. But because of that, you will definitely know that the share price definitely will be on the upside. Okay, so this is one thing you will need to take note of that. And this is what the share price is. But same nature of Keppel DC, their share price also suffer a drop. And also same thing, they also go below the pre-COVID level. Okay, all facing the same fate for the industrial REITs, all have the same thing. One thing, key reason is because they have grown too fast also. They have grown too fast. And now people have start to do rotation play, recovery play coming in. So people need to take money from profit to go to another sector. Okay, so you look at Escort REITs has started to go back to $1 again. Okay, because we are opening up. Hospitality has started to move up. Okay, but nevertheless, you look at the share price is still on a long-term uptrend. And also we need to look at when you buy a REIT, whether do they grow, have the growth potential or not. Okay, so this is what we talk about. We want to look at the mandate. They have also have a change of mandate. That's like Keppel DC this year change of mandate, change to from Keppel data center, they can go and buy other asset that is non-property related. Okay, but Mapletree Industrial Trust, I think at 2017 they tried to change the mandate. Include originally they are only buying Singapore. Then they changed second mandate. They say they will buy data center worldwide beyond Singapore. Okay, so this is a mandate since 2017, 18 that period. Then they tell the whole world we are going into the data center market, and they want to enter the data center market. They go in a very big force. If they don't go in big by one center, by two center, okay, 1, 2 center, and they are now, and they also target data center to form 2/3 of their portfolio. So just now remember, it's about 53%. 2/3 it need to be about 67%. So what does that mean? Means that they will continue to buy data center. Okay, they'll continue to buy data center because data center will be their target allocation to be 2/3. Okay, so they will be definitely into the data center market. Next is currently they haven't hit 2/3 already. They are the largest owner of data center among all the REITs listed in the Asia Pacific, not Singapore. In the Asia Pacific region, they are one of the largest. So it's not Keppel DC. Okay, actually Mapletree Industrial Trust is the largest among the Asia Pacific for the data center. Of course, compared to the US, they are still very, very small. Okay, and do think the recent weakness of the data center related REITs price also coming down is because there is a US data center REITs that want to IPO in Singapore. Okay, and that one is the world-class data center REITs. Okay, we are only Asia Pacific. That one is a world. Okay, so that will indirectly investor will think, got alternatives some more. Okay, that one we'll not talk about that in this session because everything is not concrete yet. Okay, so this is what data center is, and also we want to look at growth potential. We know that they want to grow, but do they really do they have room to grow? First is when they buy a data center, when they partner with the market, when they buy data center that time, they at one time they buy 50% stake. Their 50% belong to the market. Okay, this is what they call joint venture. Okay, so after that, 1 year later they buy over the 50%, so it's 100%. Okay, so currently this one they own 100%. This one they own 100%, but this one they only own 50%. Okay, they have not bought over from the market the other 15% share yet. Okay, so this is one thing that we will expect them to do in the near term. In the near term means maybe most probably in the next 12 months, they may do that. Okay, the most is 24 months, they will do that. I don't think they'll drag so long. Okay, so this is the data center portfolio they're going to further strengthen. So we know that this is one part. And next, that for those that read the news, this year, February, the market Mapletree have announced that they actually acquire win a land tender to build data center in Hong Kong. Okay, in Hong Kong, new territory in Hong Kong. Okay, it is Mapletree building data center in Hong Kong. And after they build finish already, who will take over the data center? Will definitely be Mapletree Industrial Trust. Okay, so they will be out of US also. They will go into another country, which is called the Hong Kong side. And they don't go there just to buy a data center. They buy a data center that's developed by Mapletree themselves. okay, by their akong. So this is what they are going in, and this is what Mapletree now, they are on the data center market. Okay, as I think that's the right move for them. Is we know that Singapore industrial building really got limitation in growth. Singapore is really too small, and how much industrial building can really give more values to retail investors. So they really need to expand overseas. Okay, and this is what they're going in. They're going to the data center market in the world. Okay, in the world. Okay, so this is Mapletree Industrial Trust. Okay, let's look at another third REIT. Okay, that also going to the data center market. And this REIT is none other than Ascendus. Okay, for those that are not aware of Ascendus, Ascendus is the second largest REIT in Singapore, and is the number one largest REIT, industrial REIT listed in Singapore, where you have 200 over properties. Okay, 200 over properties. Okay, and data center they have about 3 data center in Singapore in their REIT portfolio. Okay, only 3, but they also want to go into overseas market. And Ascendus REIT focus only on AAA country. So this is one thing to take note. So if you are not comfortable with China, we're not comfortable with Hong Kong, okay, Malaysia, okay, because Capital DC got property in Malaysia going to China. Mapletree Industrial Trust also going to China, going to by Hong Kong Road already. Okay, and they told you they buy the whole world, but you prefer to more on developed country. Okay, developed country. Ascendus told you that they only invest in AAA country. What are AAA country? UK, Europe, US, Singapore, Australia. Okay, I don't think there's any more include, and US include Canada lah. Okay, I don't think they'll go China, because China is not a AAA country. Because definitely they'll not go China. And China got Capital Land China Trust there already. Belong to the same sponsor, and then you go there. And Capital Land China Trust is going to buy data center in China also. Okay, so that's another reason going into data center, but only on focus on data center in China. Okay, so we'll not talk about that. Okay, so you are focus on developed country. You feel that developed country better, then Ascendus is the one that focus on developed country. And what is their APU? Okay, they are the second. If I know, the second or third REIT that's IPO in Singapore. So it is one of the longest history REITs running in Singapore. Okay, and here you can see the DPU have increased by 3.6%. Okay, so what does it mean? It means you buy at 2003, the IPO of Ascendus REITs, and hold until last year, your DPU actually increased by 3.6%, which indirectly your dividend is inflation hedge. Our dividend is about Singapore inflation about 2.5 to 3. So you're buying a REIT, your dividend actually increase over time. Don't talk about share price appreciation, just talk about dividend. Your dividend itself is already inflation hedge. But of course, their dividend chart. Okay, how is their dividend chart? Let's look at their dividend chart. But their dividend chart is not as nice at Capital DC. It's not as nice at MIT. Okay, but also you need to give them some consolation is because they have been through the global financial crisis. Mapletree Industrial Trust didn't go to global financial crisis, okay, because they IPO after the global financial crisis. But Ascendus REITs been to the financial crisis and survived the crisis. Okay, there is REITs that didn't survive the crisis. For those that are not aware, their REITs almost go bankrupt during the global financial crisis, and someone go in and rescue the REITs over to prevent the REITs go bankrupt. Okay, so this is what you need to know about REITs. The danger of REITs investing is they can go. Actually, the recent one is Eagle Hospitality Trust. Didn't survive the COVID. Okay, so this is one thing you need to take note. Okay, so we can see that they're going up, but after that they drop. But did they manage to recover? That's one thing. They managed to recover back, okay, from the COVID, from the GFC, and their dividend actually go higher and higher over time. Okay, and some of you say that, Darren, there is a big drop here. Okay, in 2019. You have to understand, the big drop is not, they are not performing well. You can see that here the financial is called FY1819. It's FY2019. It's FY2020. What does that mean? It means that they have changed their financial reporting. Okay, from they are supposed to end at 31st of March. They change it to end at 31st of December from here. So actually, this is only 3 quarters. So this is 4 quarter. So you cannot say that it is the drop. Okay, it is the drop. But let me just project. Let's say this is the 3 quarter, I divide by 3, then multiply by 1 quarter. I just add in. This is I project in. Actually, it's still a drop. Okay, it's still a drop. And then it dropped further. Okay, it dropped further because of COVID. So they are actually affected by COVID, not like Mapletree and Capital DC. They are not really affected so much. Okay, so they have affected by the COVID. Even their industry, they are indirectly affected. But let's look at this year, first half 766. If we multiply by 2, technically, you see the second half will be even better one. So definitely will be higher. Okay, will be higher. So they may able to recover back from 2019 level. So they have recovered. Okay, so this is what Ascender risk is. Okay, and they are going to data center this year. Okay, they're aggressively going to data center this year. At one time, they just buy 11 data center at one go. Okay, one time just buy 11 data center. So this is what we mean by that. Compared to Capital DC, as I mentioned, they do one by one. Ascender just going one time 11. Okay, and just sweep across Europe to do a package deal. One time just acquire 11 data center. Okay, so this is their first major entry into the data center market in this year March. Were they going to some more? I believe that there will be some more data center they're going to acquire along the way. Okay, as data center is an asset class, they're able to bring stability to a REITs. Okay, data center were able to bring stability to the REITs compared to other asset class. We'll talk about that later. Okay, thus you as a REITs investor, you want stability, you want dividend constants. Okay, and data center were able to provide that. Okay, so by doing on that, the data center now contribute about 10%. Initially, it's about 4% because of the Singapore data center they have. Now they got 10%. So how many data center actually they have is they got 14 data center. 3 in Singapore, okay, 3 in Singapore and 11 in Europe and UK. So they have 14 data center, which is what they are not having now. Okay, and this is our share price. Okay, you can see that they have go through a global financial crisis and there's a big dip. Okay, and they have managed to cross the peak high. Okay, they managed to recover. Many REITs never recover back from the CFC peak. Okay, up to today. Okay, but they have managed, and also they face the same fate of coming down. Okay, face the same fate of coming down, but nevertheless, it's still on the uptrend side for them. And okay, and we know that they will constantly be growing, but up to now they didn't have an official disclose of what are they going to do, what data center, which sector that they are going to. So this is something that is a black box to us. How are they going to go forward? Okay, but now let's zoom into data center asset class. Okay, data center asset class. What do you mean by data center? A data center, a lot of people say data center is data center. Actually, data center is even subdivided into 3 major type of asset class. Okay, 3 major type of asset class. And the 3 REITs, the data center asset class, their whole is different. The weightage is very different. Okay, so what do you mean by that? I will use this PGIM real estate data just to give you an illustration, because most data center is mainly in these 3 categories. One is called power shell and core. One is called power shell and core with fit up, and one is called fully operation. Okay, so these are the 3 type of asset class a data center is. Okay, so what actually is that mean? I just use simple layman term. Okay, let's say you buy a properties. You buy an empty properties. Okay, you buy an empty commercial property. After you buy an area, you get the key area, you rent it out to a tenant. So the tenant come to see is a bare unit. So you call it a bare unit. Okay, it's a bare unit. So what the tenant need to do, they need to go and do renovation themselves. After they need to bring their furnitures themselves. So everything the tenant do one, you only give them the power connection only. You just turn on the power supply for them only. That's all. Okay, that's all. So the tenant do everything. And on top of that, the tenant rent from you already. The tenant will pay for the property tax themselves. The tenant will pay for the property insurance themselves. And the tenant will pay for the maintenance expenses themselves. So this is what you call a triple net lease. You see a power shell and core is a triple net lease thing. So what does that mean? That means you only rent an office building to them and you don't need to do anything. You only need to collect rent. You only need to collect rent. Even the insurance or the maintenance costs you don't even need to bother. The tenant will handle everything. So this is called triple net lease. What is common in triple net lease? What type of asset class is healthcare, hospital, Parkway Life. Parkway Life, the 3 hospitals they rent, okay, it's all triple net lease, which is why you can see Parkway Life that dividend every year just go up and don't need to do anything. Okay, don't really need to do anything. Sit down there, shake leg, dividend go up. So this is what triple net lease is. Imagine you're a tenant. You go in and renovate the whole thing. You have sunk in a lot of cost to renovate all this thing. Of course, you want to sign a long-term lease. You don't want to sign 2 years, get out already. Then need to restore back everything. Then need another place to start. So when you do all these things, you definitely want to stay long-term. So when you stay long-term, you sign a long-term lease. So you see the lease will be long. Okay, you sign a long-term lease on that. And you as a landlord, when you sign a long-term lease, you always call escalation factor. Okay, this is just like what Parkway Life do to the hospital. That means that what rental will only go up year on year with what sometimes called CPI or sometimes called inflation. So what does it mean? That means if I rent a power shell building to a tenant, I know that I sit down there, shake leg, my dividend will increase every year. Will year on year just increase one? Okay, because and the tenant will want to stay longer because they have so much cost incurred already. Okay, so this is called a power shell and core data center. Next is called fitted out. Power shell and core fitted out. This is I buy the building already, then I fit up some simple thing. I may put some lightings for you. I may paint the wall for you. Then I may put simple furniture for you. Okay, simple furniture for you. Then if as a tenant move in, you need to put in more things already. Okay, or you may because I only give you simple furniture. Okay, so you may want to buy other things for your own. Okay, and thus you incur cost also. And thus this type of property you see it can be double net lease. Okay, means that the tenant may do the maintenance cost. They bear the maintenance cost. I pay for the insurance. I pay for the property tax. But the day-to-day operation cost, maintenance cost, the tenant bear. Because all their equipment. Cannot be I maintain for them. It's their equipment. So you are maintain for them later. I got liability. Okay, so for this type of thing, the tenant will also want to sign long-term also. Okay, because the data center is there. Okay, the data server all is there, their cost one. So they also want to sign long-term. But I think the term may be shorter than this. Okay, but it's still a long-term thing. Okay, and of course, then if you sign long-term, you will definitely want to fit up with a escalation rent also. So this is called power and shell call fit up. Okay, and the last one is called fully operation. So fully operation means that I as a landlord, I buy the properties already. What I do a full renovation for you. I put in a server rack. I put in everything for you already. To you as a tenant is to you someone I want to buy rent a place, just a move-in condition thing. That means when I sign with you, tomorrow I can start work immediately in your office. Okay, because you provide me everything. Okay, so this is called a fully operation data center. So indirectly, as a landlord, I need to do what? Maintenance. I need to do the maintenance of the building. I need to upkeep of the building. I even need to update the server, all these things. Because I provide everything. So you as a tenant just come in, just so you can operate. So there is no good capital cost the tenant will come in. So for this start, you may not sign a long-term lease. And you see, maybe for a smaller company, a smaller company, they just start up. They just want a space to do only. After they go bigger, they may go other place already. So the turnover of tenant will be high. The turnover of tenant will be high. And thus, it depends a lot of risk manager need to see that, when this tenant go already, they need to find a replacement. So there's more work for the risk manager. Okay, and you find a replacement, all these things. And sometimes one building can have multiple tenants. You see, for power shell and core and all these, one whole building only one tenant. Okay, because sometimes data is very sensitive. Okay, data is very sensitive. They prefer to everything on their own. But for this one, can be have a few tenants in the building. Okay, can be a multiple tenant in the building. So this will depend on the risk manager ability to able to manage the data center. Okay, because of that, they will definitely charge higher rental income. Okay, so for rental income you collected here definitely will be higher. Okay, rental income here definitely be higher than rental income here, will be definitely be higher than here. But this one, you know that give you stability. And you know that your rental will definitely increase. This one, although higher, but it gives you some uncertainty. Is sometimes the tenant move out, you need to find a tenant. What happened in between? It's no occupancy. If nobody rent, it's zero income. Okay, so it's zero income. So it depends on what type of investor you are. Okay, what type of investor you are. If do you want something that's stability, you don't mind starting with lower, but you know it's escalating, or you want something that's higher, very much depend on the REITs manager, on how good are they able to secure proper tenant, all these things. Okay, so this is depend on what type of investor in, and then from there look at the property the REITs have. Okay, in this. So let's look at what are they. So look at Keppel DC. So you can see the rental income for Keppel DC. 71% is from co-location. Co-location is equivalent to fully operation. Okay, fully operational one. So what does mean? It means that Keppel DC everything. So you can see the wheel is very short. It's only 2.8 years. They will tell you they do the M&E, they do the facility management. Okay, they do all the thing one. Okay, they have because they have to own the thing. Okay, shell and core is the empty one. So as you can see, they don't own anything. Okay, fully fitted is the one that in between one. Okay, then they own M&E only. Okay, so this is what they have. So Keppel DC focus, the data center are mainly on co-location, especially on the Europe side. Is co-location is more popular. Okay, so this is what they have. So they will have a tenant turnover very high, and you see multi-tenant. So it very much depend on the risk manager capability. Already. So this is something you need to take note. The rental income may be high, but there's a risk of tenant turnover and renewal list. Okay, so this is what Keppel DC data center is. Okay, let's look at Mapletree Industrial Trust. This is before the 29 data center. I have to split the data separately because Mapletree also Industrial Trust only merged together during an annual report. Okay, you can see this is the 13 plus 15 one, the first two batches, the 28 data center they bought. Okay, 96.6% are triple net lease. Okay, so you can see they don't have the co-location data center. Okay, they don't really have that kind of co-location data center in that, and you can see everything is triple net lease. What does it mean? Means that they just shake leg collect money only. And this explains why they can go to US and straight away acquire 13 and 15 within 2 consecutive years. Okay, without even knowledge about data center in the US market. Because what they do is triple net lease, don't really need to bother much. And just depend on Temasek people in US, the Temasek office people in US to help to jaga all those things. Okay, and this is what they collect by the data center. Just strictly collect money. Okay, then we more explain this is the data center they buy. And the next 29 data center they just acquired July. 81% is triple net lease. Okay, not triple net, they have started to come down already, but this one will indirectly give more rental income. Okay, so no matter what, they are still on the two part. That means they are still on the first asset class and the second asset class. They didn't go to the third asset class of data center, which is the fully operation data center. Okay, so they don't manage the type of data center. And all these data centers are in US, so it's too far for them to really do that management. Okay, so this is a Mapletree Industrial Trust data center. It's more like a hands-off type of data center, but of course, the rental income collected will definitely be lesser than co-location. But we know that the stability is definitely there. Okay, in that aspect. Okay, so this is Mapletree Industrial Trust. Okay, next we look at third one, which is Ascenders. Okay, we look at the 11 data center that Ascenders have bought. Okay, in Europe. Okay, 37% is for income is from co-location. 63 is on triple net lease. Okay, 63. So they only have two parts. Either it's triple net lease, don't care one, or they care one. Okay, they go to two extreme. Okay, do extreme in that aspect. So you can see, so the three REITs, the data center allocation is very different. So Maple Tree Industrial Trust, it go to one extreme, they don't need to care. Okay, Capital DC, they need to care a lot because 70% is co-location. Ascendant is in between. Okay, Ascendant is in between. So depend on what you are looking at on that. And this is how this three data center is. So if you are someone that want to just to have stability of income, you don't mind initially getting lesser, but you know at long term your dividend will only go up, then Maple Tree Industrial Trust will, the data center classification may be more suitable for you. But I want to have someone that I want higher dividends. Okay, and I expect the risk manager to be very competent in getting tenant to renew and keep on jack up price, all this. Then you may want to look at Capital DC. Okay, because they are in that category. Okay, on that aspect. But you want someone that in between and we have a longest track record. Okay, is Ascendant. Then you look at Ascendant because Ascendant it have the longest track record. And in fact, Capital DC have a very short track record. It's only 5 to 6 years. Maybe the tenant only go to one renewal. Second, third renewal, whether can they still do that well, we don't know. If there's more and more competition on data center, on that, are they able to continue to fight the co-location side? Okay, that one we also don't know. So this is some uncertainty. You need to think note of that. And these are the three different types of data center. It's personal preference. Of course, you say they got money buy everything lah. Okay, but I also recommend got money buy everything. It then become too many things to buy already. Okay, so this is one part. Okay, next we want to look at growth. Okay, this is one part. Then we want to look at another thing called growth. When it comes to risk investing, size also really matter. I was, for those that attend my risk webinar before, I always remember I talk about size. Size is really important, especially for retirees. Okay, because my course also teach many on lifetime income, how to generate passive income for life. So it's targeting people planning for retirement, especially for retirees. Retire by REITs, please focus on big one. Okay, please focus on the big one. For retirees, please don't focus on the small one. Okay, and also gearing also very matters on that. Let me just use the three data center to do a comparison. So let's look at Capital DC. 3 billion, that's the asset. Okay, 19 data center across 8 countries, plus and minus. Okay, Maple Tree Industrial Trust, 8.6 billion, 100 over properties. Actually, is to be exact, it's about 140 properties. Okay, in Singapore and US. And data center itself contribute 4.6 billion, is 53%, and they got 61 data center. Okay, 61 data center. Ascenders, 15.9 billion, 200 properties. Data center only about 14 now. Okay, 14 now, but I believe this percentage, okay, this percentage, I believe this percentage will definitely increase over time. I think that may be one of their growth to increase it. Okay, and this is what they have. Okay, now let's look further. Let's look at their factors. Okay, let's look at the factors of asset, gearing, and headroom. Okay, so we look at this. Okay, for those that asset, I think no need to explain too much. Everyone knows asset. For gearing, for those that are not aware what gearing is, all the REITs need to borrow money. Okay, if a risk manager don't borrow money, he will be fired in AGM. Okay, so it's a must. The REITs must borrow money. Okay, in order to create returns for investor. But there is a limit they can borrow is 50%. That's a max. Okay, that's the maximum they can borrow. If go over 50%, they'll get fired by MAS. Okay, so this is the gearing, and the gearing are all considered healthy range. As long as below 55 is considered, 45 is below healthy, 36.7, 40, 37.7. This is on a slightly higher compared to the rest, but it's still pretty healthy. Okay, next we talk about headroom. What about headroom? If the REITs want to borrow money, they can only borrow up to 45. Okay, this is my criteria. After 45, try not to buy that type of risk. Very risky risk. Okay, so with a 3 billion asset and a gearing of 36.7, Capital DC can borrow 453 million. Okay, can borrow 453 million. Maple Tree Industrial Trust can borrow this. Ascender can borrow this. Okay, how much does a data center cost? The data center cost, I think the price have increased over time, depending on which location you buy. They buy in Europe, maybe 30 million can get. They go China to buy 100 million. I also don't know why China data center is so much expensive than Europe data center. Okay, this based on the purchase price Keppel DC buy. They buy 100 million in China, but Europe they only buy 30 over million. Okay, let's just take 100 million. Okay, as an example, China one maybe is bigger. Okay, so 100 million. So how many can they buy? 4. How many can buy? 7. How many can Ascender buy? 21. In order to hit the 45 gearing side. So what does that mean? That means if Ascender really wanting to go to data center market, they can go very, very fast as they got the muscle. We got size. Okay, so this is why I talk about when you want to buy REITs, buy size. Size will able to help the REITs grow faster. Okay, go faster. Okay, go fast. If Keppel DC want to buy 7 data center here, okay, they need to do equity fundraising. They need to ask for money. But Ascender want to buy data center, they need to buy more than 21, then they ask for equity fundraising. So you can see the interval of asking for equity fundraising. Imagine for Keppel DC to grow to Maple Tree Industrial Trust this size. For retirees, I think the dividend you collected all must give back. Over the years, the dividend collected all must give back to Keppel DC. Okay, all must give back plus top up in order to help them to grow. Okay, so this is what I mean by size. Okay, so Ascender is already so big size already. Of course, it will continue to grow. So a smaller risk, the interval of they asking money from investor will definitely be more frequent. Okay, so this is what we mean by that. So this is what I'm talking about size on this aspect. So this is maybe it will help you to better decide of what you want to invest in REITs, in data center, which one would your more optimum choice. Okay, and next, let's look at price performance. Okay, of course, buying is one thing. Entry price is also another concern. Okay, of course, you want to buy at a good price. Okay, buy at a good price. So this is the price chart among the 3 data center. Okay, you can see Keppel DC is the worst. Down 20% already, 1 year. Okay, now 20% already. Okay, but do think no, this is price exclude dividend. Okay, but their dividend yield also very low. Okay, and Maple Tree Industrial Trust is second, Ascender is third. Okay, all are negative returns. All are negative returns on the. So this year, all the REITs are underperform the STI. Okay, the REITs in that underperform the STI as the major REITs all drop. 2 years, you will see a different thing. Ascender REITs is still negative, but of course, plus the dividend will be positive. Their dividend about 5-6%. Okay, MIT is positive. Keppel DC is positive, but if you were to add in the MIT dividend and compare Keppel DC, I think the gap will be lesser because Keppel DC dividend yield is lower than MIT. Okay, so it's positive. Let's look at longer term. 5 years, all are positive. Okay, all are positive. So you can see that actually the one that in between actually is Maple Tree. Okay, Maple Tree, the recent performance is in between. Ascender is a bit weak. Okay, Keppel DC, you also look at the drop. Actually, Keppel DC is the one that dropped the most. Okay, at current share price, the price weakness of these 3 REITs are actually, to me, is quite a decent price now. Okay, to quite a decent price. Whether can they go lower or not, that one I don't know. But if you are looking at longer term, they are at quite an attractive price now on that aspect. Okay. So this is something that you can look at it. So depend on which REIT you want. A lot of people ask me which one to buy and what is the good price to buy. Current market situation, the 3 REITs, the price is quite attractive. Personally, I feel that Maple Tree Industrials may be the most attractive. Although Keppel DC look like drop a lot, but I'm concerned about the growth future on that. Okay, so this is how you look at the 3 REITs. Okay, so this is on anyone got actually no, there's no question asked during the session. Okay, anyone got any question, you can just post that, then I can answer it. So far, only got 1 question asked on the YouTube side. Okay, the rest all got no question. Okay, then in that case, let me just continue. So do take note, this is on data center, and no matter how good a REIT is, there's always a time you'll go down. Okay, there's always a time you'll go down one. Okay, this is a classic example. A risk can go up all the way high, but it can go down. But unlikely you'll go all the way down to here. This is unlikely. So that means there sometimes they will need to rebound back. So it's a lot of things. Also, timing of entry is also very important, but also me due to asset allocation. I advocate that as a retiree side, REITs should not be your major portfolio. REITs should not be your major portfolio for retirement. Okay, it should be one of the asset class in your retirement portfolio, but not your key portfolios. Okay, not your key portfolio. As risk got the underlying risk, or not called underlying risk, underlying thing is equity fundraising is a in thing, is an inborn thing in the risk manager. Okay, they will definitely call for equity fundraising. Even you buy the biggest REIT ascendant, you also have equity fundraising. It's just an interval of it. They calling it is lesser compared to smaller REITs. Okay, compared to less aggressive risk manager. So this is one thing that if you are looking at risk for retirement, need to think of structure policy. And thus, I always advocate that your portfolio should be on a basket approach. What do you mean by basket approach? Okay, you need to classify your portfolio into a risk-based portfolio and also a promise-based portfolio. So what is a risk-based? Risk-based is buying bonds, buying REITs, buying stock, buying unit trust, and also buying properties. Okay, buying properties also on top of that. I can't talk about property because I don't have a license on properties. Okay, but property is also one of the asset class. And guarantee we're talking about CPF Life, retirement plan, Singapore savings bond, AAA bond. So these are promise-based. So we always talk about building a multi-asset portfolio for your retirement purpose. And this is ultimately what you hope to achieve for your multi-lifetime income portfolio is you need to have something that from the base we call the paycheck that give you a guaranteed income. What do you mean guarantee? Regardless of market up, market down, you know that you don't have any worries. Okay, now of course, then you want to have a paycheck we call variable income. And that's where you enjoy your life. Okay, that's where you enjoy your life to the fullest. Okay, especially when there's a good market. So what does it mean? Let's say you need 3,000 to hit your basic necessity, right? Then the CPF Life will definitely not be enough for you. Because CPF, the most now is only can pay you 2K per month. So let's say your basic is only 1.5K per month, right? Then your CPF Life is more than enough for you already. Then you don't need to think about all these things. Okay, all the other asset class, all other promise-based already. But let's say you need 3K, then you need to find the different to top up the 1K. It can be by retirement plan. It can be by Singapore savings bond. It can be by your CPF balance on this to top up this. And with this already taken care of, you can focus on building your investment dividend income. Okay. When your bottom line is being taken care of, usually you are able to manage your portfolio very well. Okay. But if you are depending on this for a living, then you may not have a good retirement life. Okay. Okay. So you may not have a retirement life on this, on that. Okay. So this is something you need to think. Okay. There's a question still from the YouTube channel. Okay. Will Evergrande saga and shortage of chip affect data center REITs? Okay. Evergrande saga actually is an opportunity for people to invest. Especially if you are someone that can take more risk you can find good property stocks in Hong Kong and China and can buy. Okay. They are good one. Okay. Because the market don't care one, they whack everything. So all the property stock all get whacked. Okay, but if you're going to be choosy and pick the good, fundamentally strong property stocks, actually you will be the one that left to the bank in the end. Okay, because they'll definitely recover. The good one. Okay, so it will definitely not be a saga to data center. Okay, because that's only on China, and Evergrande will not unlikely to spill over to US. I think US don't even bother about Evergrande. Okay, don't even bother about it. I think Singapore also don't really bother. So and China Communist Party were able to make Evergrande an orderly collapse. Okay, if they want Evergrande to collapse. Okay, if not, they were able to orderly collapse. So will not be effect on that. Okay, and actually chips shortage is a known thing. It's a new thing. it's not unknown. It's a known thing already. So it will not have really a big impact to the risk side. You don't even have much impact to the semicon industry already. So unlikely will have much impact on the risk sector. Okay, on Singapore context itself, I don't think there will be any impact on that. Okay, we are more concerned of other factors. Okay, there's one question. How is the data center affected by high electricity costs? Okay, this is what data center were more concerned of, is the power supply, which is why Singapore has a moratorium of that for REITs to contribute data center, because it consumes too many electricity costs. Okay, and okay, the electricity cost to data center, right, I think will be able to control. We know that the electricity price will go up, will come down one. Okay, but data center is the in thing that we need to do, is a progress that we need to grow, because we are going more on technology side, more on cloud computing, all these things coming. So data center is an in demand thing. Okay, so the only thing that human being will start to innovate, how to bring the cost of electricity down. Okay, how to bring the cost of producing electricity down, how to improve efficiency. For those that are not aware, I was an engineer for 10 years, and I was an engineer in the power plant industry. Okay, I built power plants. Okay, and we generate electricity in Singapore. Okay, so I don't think there will be a big concern. Okay, engineer will know how to innovate that. Okay, as long as they can improve the efficiency of generating the power supply. Okay, so that will not be a big concern. My only concern is more on the carbon credit. Okay, cannot fire coal. Okay, any coal is not that efficient. Okay, then natural gas, all these things. So this is more, but that one is not really on the data center side. It's more on the environment sector side. So I don't think there will be a very big impact. The key impact will be mainly on the interest rate rising. Okay, interest rate rising, it because will affect the cost of borrowing, not only data center REITs, all the REITs. Okay, if the interest rate rise too fast, it is negative to the REITs. Okay, but if the interest rate is slowly up, then I don't think will have any impact to the REITs, as the rental income will able to compensate for the raise in interest rate. Okay, well, interest rate rise means actually economy good. Economy good, people can spend more. The landlords are able to squeeze more rental from the tenant in order to pay us the dividend. So indirectly, it can hedge off the interest rate they need to pay the renter. Okay, but if the interest rate go too fast and economy don't recover, then there will be more negative impact to the risk as a whole. Okay, so this is on that aspect. Okay, so this is on how we can build a multi-asset. So do think that risk is one of the asset class for the retirement, but it should not be the main asset class. Okay, because of the underlying fundamental risk of the risk is. Okay, and this boils out to actually the cost actually I conducted is called a lifetime income mastery course. Okay, this is a course that is pre-funded by IPF. Okay, and we only have 2 more runs to this year. And actually this is a course I conducted by me online with 2 assistants. Okay, and what actually this course is, the course objective is to teach you how to build multi-asset portfolio, okay, to generate lifetime income. Okay, it's not asked to be a trader. Okay, it's to move towards income investing. Is an income investing passive dividend strategy. Okay, so this course is divided into 10 modules. Okay, it divided in 10 modules and 3 parts. So the first part comprised of 4 modules. Okay, so the first module is more talking about checking your finance. Okay, before you want to grow your money, you need to know where your money is first. You need to generate your own net worth and cash flow statement also. And a lot of time I will share with my clients because I'm always the one that review my client portfolio. If you can able to tidy up your own personal finance, you're able to increase the returns of your current asset class by not taking additional risk. Okay, do think increase your return of your current asset class by not taking additional risk. One simple example, SRS money. If you to put SRS money into the SRS account to save tax, but don't do anything, you're earning 0.05%. But a lot of people say, I don't want to take risk. Yes, but can you take your SRS money to go and buy Singapore savings bond? Okay, your return will increase from 0.05 to 1.4%. That's how many times your dividend will increase. Okay, but do you take additional risk? No, you didn't take additional risk. Okay, so this is what I mean by that. And by that, you will see that you are so much better off. Okay, in that aspect. Okay, and okay, is it too late? It's never too late. I got people come to me at 60 years old. It is never too late. Okay, there's no such thing as too late. You tell someone that's 20 years old, you tell you they are too young. Okay, but actually, it's always good to start early, but it's never too late. Okay, and so the second part we're talking about is called protecting the downside risk. Okay, what do you mean by downside risk? Is we're talking about insurance. Okay, insurance will never make you rich. So this is something you need to take note of that. But we need insurance, especially medical insurance. Okay, especially medical. You don't want to be all your investment return all in the end go to the doctor pocket. Okay, so you need certain. So the cost is to teach you that how can you optimize your insurance plan. Okay, bring down your cost of insurance. Okay, so that you are protected but got money to plan for retirement, and you don't become a slave to pay insurance premium. Okay, so this is what we mean by protecting your downside risk. Okay, the third part we're talking about CPF. Okay, CPF, we are not talking about, we are talking about CPF, and we of course will talk about CPF Life and how can you do CPF shielding. I'll elaborate how to do CPF shielding not only on the SA, also on the OA, but that is only one part. The next part is how to withdraw your money out from your CPF. How to take out money from OA instead of taking your SA. The legal way. Well, of course, there's a risk involved. How you need to manage that type of risk, and how can you optimize your CPF money before your retirement age? How can you grow better? Okay, so this on the CPF side. Okay, next, we'll talk about SRS. Okay, SRS is an asset class that able to help you to save tax. We also know what can you invest in, but also we need to look at the strategy to withdraw your SRS money by minimizing the tax you need to pay. Okay, so it's not only just to save, but also when it comes to withdrawal part, how can you minimize that? Okay, so this is on the SRS portion also. Okay, this is on personal finance. After that, we're going to talk about income asset class. So the first asset class we're going to talk about is the bond. Okay, there are six main categories of bond here, and we can see from here there is two parts. This is called the risk-free bond. This is called the risk bond. Okay, so the risk-free bond, we'll talk about how can you get all this risk-free bond, okay, on your own. The risk bond that we just hope that you don't buy another high flux. Okay, so this is do take note, this is not a theory class. It's not like this session that you listen to what I talk. Okay, this is a hands-on class. What do you mean hands-on? In the class, we will analyze bonds directly that is currently in the market. That means that after the analysis, tomorrow you want to buy, you can buy. Okay, we're not going to talk about high flux, why do you fear all these things, because we can never turn back the clock. We want to look at currently, this is the bond in the market. What can you look at it? And what are the data I need to look at it? And whether this bond worth you to buy at tomorrow or not. Okay, to be inside your portfolio immediately. So this is what we are talking about. It's more towards the current time. Okay, and we'll do at least 2 bond analysis in a class. And with it, you can go and do an own analysis on the rest of the bond. Okay, next, we'll of course start with stocks. Okay, there is value stock, growth stock, and none of above. This course, we only talk about value stocks. Value stock is not value investing. Value stock, we are talking about stocks that are able to give you dividend on an ongoing basis. The best is can give you dividend perpetually. Okay, so this is what we are looking at. So you're trying to look for, identify this type of stocks, okay, that is good for retirees. And we analyze stocks, the Singapore stocks. We'll not look at foreign stocks. Okay, as this course context is more focused to Singapore retirees. So we'll look at, and we analyze at least 3 Singapore stocks, but you can use this method to look at foreign stocks. Okay, and for growth stocks, I only talk about that during the revision class to the graduate that are our strongest client. Okay, so this on the value stock. And of course, we'll definitely have to talk about REITs. During the class, we'll also talk about 3 REITs where we analyze the REITs. Okay, we look at what are the key points you need to look at to buy a REIT. Okay, try to look for REITs. Don't focus too much on REITs that are on a discount. Try to look for REITs that are the premium. There's a reason for that. Okay, there's a reason for that in that. And we'll analyze at least 3 REITs. And do think that at the end of the course, I'll give you a list of stocks, a list of unit trusts, a list of REITs for you to put on your watch list. Then you can monitor them and you can decide how you want to put that into your retirement portfolio. Okay. And module 8, we will talk about unit trust. There are close to 2,000 unit trusts in the market. Okay, and not all are good. Same thing for stocks. Not all are good unit trusts, not all are bad unit trusts. So we also need to identify unit trusts that are able to pay you dividends consistently over time. And of course, we also do a comparison with ETF in this class also. And so to show you the compare and contrast, whether should you buy unit trust or should you buy ETF for your retirement portfolio. And module 9, we talk about the asset class that promise you money, which is the retirement and savings plan. Okay, and how can that fit into your retirement portfolio and in this aspect? And everyone is different. So certain of you may want to be more aggressive, certain of you may want more conservative. So the asset allocation will vary on individual need. And this is where we come up with this thing that for you to build your multi-asset portfolio. So we don't have a standard portfolio for everyone. Okay, so it's a hands-on class, so everyone can build your portfolio based on different asset class, okay, to fill up the whole retirement puzzle and that. But how to do this is you need to have tools. Okay, so do take note, this course is not for everyone. If you do not know how to use Microsoft Excel, please don't attend the class. If you don't know how to use Google Chrome to surf the net, okay, some people like to use Microsoft Edge also can, but you must know how to surf the net. You must know how to go from one website to another website. As this is an online class, I can't hold your hand to guide your mouse where to click, where to point to, okay, as I can't even see you. So the prerequisite is please know how to use Microsoft Excel, and please also know how to surf the net. Okay, if not, the course may be tough for you because you can't even navigate to the website I ask you to navigate to. Okay, so this is something you need to take. I'll give you the spreadsheet so that you can work on to plan for the retirement. Okay, and I also have the YouTube channel after the course that you can go and look at it. You can go and subscribe for it. And this YouTube channel actually is all linked to the course content one. Okay, all linked to the course. Of course, it's not a course content. It's linked to what we talk in the class. That's I've actually analyzed 11 REITs in this YouTube channel already. I talk about 11 REITs. Okay, and actually, to be honest, these 11 REITs are the REITs I put in the watch list. So whatever the watch list one, whatever counted in the watch list, I try to do a YouTube on that to explain on that in more detail, because I can't explain everything in the 20-hour course. And I also have a Facebook page. Okay, this Facebook page will post about other webinar. This is a cybercode webinar, but I personally do a webinar at least twice a month. Okay, so will not be marketed to cybercode. So you can actually attend the webinar also, and but I'll post it on my Facebook page. Of course, our drawing client will be notified lah. For non-client, you can only notify on Facebook, okay, or our YouTube channel. Okay, and this is a course that's 90% pre-funded by IBF. Okay, and will end by 31st of December. If you are Singaporean, you have 10%. You can use the 10% to pay by Scale Future Credit. So some people say that actually I don't need come up money to attend course. It's true that you don't really need to come up money to attend course if you are Singaporean. Okay, so the course fee is 1605. If you are a Singaporean PR, you only need to pay 160.5. Okay, and this, if you have Skill Future Credit, you can use 160.5 to offset it. It become a cashless cost for you. Okay, so for those that are interested, you can just scan this QR code and send on that. Okay, on this. Okay, if not, okay, let me just answer one last question before I pass to Andy, because there's a question. That's why I didn't. Okay, if REITs will rise equity at some point and dividend will be returned, then is it worth to have REITs on your portfolio? Okay, this is a very good question. Okay, yes or no, that depends. There is a handful of REITs up to today never do equity fundraising. Even 8-9 years. Okay, even 8-9 years, they never do equity fundraising. Okay, but there is some REITs that every year ask for money. Okay, so that depends on what REITs you have. Let's talk about Mapletree Industrial. Although they have do equity fundraising, okay, but the way they do equity fundraising, they ask for money is very minimum from you. But the dividend and the price appreciation they give it to you is a lot. Okay, so you can see they give $1,000, they ask you back $100, so you still make $900. Okay, but certain REITs they give you $100, they ask you back $1,000. Okay, so that's where when it comes to REITs, selection, it will be more critical. You must able to pick the REITs that will give you more than what you need to pay them. Okay. Okay. Parkway Line, correct. Parkway Line never ask for money, but do think that it's only up to now. Okay, either up to now. If they were to go and acquire Mount E Novena, they have to ask you for money. They have to. Okay, they have to, and they have to ask you for quite a lot of money. Okay, because now E Novena is too big for Parkway Line to stomach. So they may never buy Mount E Novena. Okay, if they don't ask for money, they were not able to buy Mount E Novena. But whether would they buy or not, nobody knows. Okay, that will up to the REITs manager. Okay, if not, Andy, are you there?
Yes, Darren,
Okay.
can you hear me well?
Yes,
Okay,
I can hear.
cool. Thank you, Darren. Now, thank you very much for those who stay on for the last 1 hour plus. Now, indeed, well done. I think today, the comparison between the data center REITs, which is one of the topic that actually, when you come forward to join our lifetime income mastery course, tutored by Darren Chew, Financial Services Director with Philip Wealth Department. Now, I think, in fact, I think Darren did mention to all of you here. Well, it's quite true. IBF funding of 90%, I just type it into the chat as well, is going to end very soon. 31st of December. Now you're looking to the calendar. Today is already 18, right? So, sorry, 19 already. So you left less than 2 months to end the session. So these two intake of the November, 11, 18 November and 13 and 20th November, as well as 2nd and 9th December and 4th and 11th December will be the last two intake before you are paying double of this 160. What does that mean? Which means next year onwards, 2022, 1st January onwards, right? This is the concrete information you receive from IBF already. Remember the IBF video we just played before you join in? The Institute Banking of Finance, this Lifetime Income Mastery course is accredited by IBF, right? So we imagine next year, 1st January onwards, right? 1st Jan of this 2022 onwards, the payable fee will be $160 times 50 cents times 2, which means that next year you are going to pay $321 to attend the same course of this Lifetime Income Mastery course taught by Darren Chew. So which mean if I were you, if you're able to make up the date for, in fact, we have these 2 dates for you for the selection, November as well as December. Just select one will do, and then of course you got to make a payment, right? If you don't make payment, then we are unable to reserve the seats for you. Okay, on my side, I'm going to do a quickly run through. I think I just sent the course. There's a URL link for the registration for all of you here. Now, what I can do on my side, I'm going to do a short run through of this a skill future, right? For all of you here to go about that. Now, maybe I go to skill future. I will just quickly go through this one. I just share screen on this one. I'll let you just go a little bit to understand a little bit more on that. Now, when you scan in the QR code, I believe all you can see this slide of the course registration form, LIM course registration. LIM stands for Lifetime Income Mastery course in short form, right? Now, you can see that there's a selection of course date. You have to see there's 2 dates for your selection. We have this November intake as well as the December. Now, this will be the last 2 intake before the 90% ends. So basically, you select either of the batch on November or December, you're still eligible for the IBM 90% funding. Of course, the condition, you need to be Singapore citizen, you need to be Singapore permanent resident, you are residing in Singapore, right? I believe all of you are residing in Singapore, right? You can't travel out of town. Okay, so what you can do here, you see here, there is also the what do you call that? You see the day and then the name as per. Now, you see this one, you got to key in, right? You've got to key in and self-paying individual. Now, coming to the last portion, what you can see, you see there's a payment mode here. Now, payment mode here, basically, we have about, as you can see here, 1, 2, 3, 4, 5. There's a 5 types of payment selection for all your mode of selection. Now, like what Darren mentioned, if today you join in, you as a Singapore citizen, if you have a skill future credit, which later I can run through with you, I'll log in my own account, going to share with you. Then you can use your skill future credit to make the payment of $160.50. Like what Darren said, at the end of the day, you pay $0 to attend this Lifetime Income Mastery course. If you have the skill future credit, right? Of course, you got to log in with a SingPass, right? Which I'm going to share you later part. Now, permanent residents, you will still eligible under the 90% subsidy. So you only can use the payment either go by PayNow, PayLah, or even Master Visa or this MasterCard, right? Now, again, you see this last one, there's a check payment. Although we have a check payment available for course participant to make payment selection, but because now due to the COVID, right, we very much want to constrain on the, in contact with the course participant. And that's the reason, although we have the available of the check payment, I'm strongly advise the course participant using the first 4 payment method, right, to make payment, because check payment, we still have to be ensured that the check to be reached us. And then moreover, nowadays we all knew, right, the default still work from home. Of course, today I come to office, then I'm able to come to office. Let's say what I don't come office, basically I'm unable to check whether the check has been received. And that's the reason why we strongly urge that the individual, if you can, PayLah, PayNow, or online payment are so common, especially PayLah and PayNow nowadays. You can even pay up to $5,000 or $10,000, which is quite a big gap. You can use that, so you can use that to make payment. So this is 4 different types of payment selection for you to go through. And of course, for those who are using SkillsFuture, then you have to click on SkillsFuture, then you have to submit all those information you got to fill up, all right? And then you click on the submit button, and then it will send a course registration form into your email, right? Now, I will quickly just go through with you for the SkillsFuture, right? SkillsFuture, basically, you got to sign if you're saying pass, right? So what I can do here, I'm do a simulation of the SkillsFuture, because there are some of you, I think most of you have SkillsFuture credit, right? So what I can do here, you can actually use your SkillsFuture credit to pay for this $160.50, right? So I believe all of you can see the screen right now, right, with the SkillsFuture. So what I can do here, I will just click on the SkillsFuture credit. I will do a submission of credit, and then I will click on the login, and then it'll prompt me to key in my SingPass account. So I'm doing a simulation using my own SkillsFuture account to do the signing in, right? So I will see that it will be easy for me to do a simulation, and then you can see that how to do the submission of the claim using the SkillsFuture credit. Now, what you can see here in the next 10 seconds, yes, you can see my name appear here, right? I believe you can see them. Double check again. Yes, you can see. Correct. Okay. So you can see my name is Andy here, and then the credit is here. So what I can do here, you go to digital service, you submit to claim the SkillsFuture credit. All right. Now, next page, it will show you the credit, and then like myself, I have not used up the credit, right? So basically what I can do is just proceed to submit the claim, right? Just do that, submit the claim, and then come to here, you just key in the course title in, lifetime income mastery course. So the good news is, you see when I key in, right, our course name, our lifetime income mastery course is already listed in SkillsFuture portal. So it's preloaded into already in the SkillsFuture portal. You can see the course code, you can see the training provider, cyber code, parameter, and then of course, because now we have different dates, right? So over here, you just go to next button, then you can key in the course start date of the next variable course start date. So since we have 2 course start date of November and December, so what I can do, let's say if you select for the November, then you quickly go to November, then you key in the first course start date is on the 11, right? You just key on the 11, and then you only key in the first course start date, right? And then you key in over here, there's 2 columns, you just key in the dollar signs of this, both, right? $160.50. So you ignore the dollar sign. The dollar sign is already provided. So there's a fee payable by you, including GST, and then the amount of credit to be claimed, including the GST. Both also key in the same dollar value of $160.50, which is the 10% of the course fee. And then this is the portion that you need to take note, right? You have to upload the document, right? Because remember, tonight I went through with you the course registration form. For those who already filled up the form already, you got to submit, right? Once you do the submission already, within about a minute, right, Cybercode will send you an email, a thank you email with the course registration form and in the PDF form. And then if those who are using the SkillsFuture to claim, then you have to, that PDF form, you got to save it into your local drive on your desktop. Then what you can do when you tap into here, and then you go and search, let's say you save it in desktop, you go and select it, and then you just open it up, then you can attach here into the upload document columns, right? So SkillsFuture portal, when you do any submission of the claim payment, in this case, then yes, you need to have a supporting document. So if you don't provide the what call it, like the course registration form, then you're unable to do the submission, right? Bear in mind, right? So then after that, you just click on the small box, the terms and condition, and then you just punch on the submit button. And then in the next 5-10 seconds, there is a pending ID with a 10-digit number appear, which means that you have successfully done the submission for the claim. And then SkillsFuture portal, it will only debit the $160 or 50 cents from your account, from your credit, when you start the class. You start the class on the 11th November, right? So on the 11th or even on the 12th of November, your total fee of $1,500 will be minus off another $160.50. So this is actually for the individual who are using SkillsFuture to claim, right? Now, of course, individual, if today you are joining in as a PR, right? So you don't have SkillsFuture, basically, like I mentioned earlier on, you can use PayLah, PayNow, or online payment to make the payment, right? So let me just repeat one more time again. So this will be the date. So what you can see here currently, right? Let me just put it into the full slide, right? So what you can see here right now, right? Okay, good. Now this is what you can see right now, right? So same slide. What you can see here, we have two variables slot for you for your selection. We have the November batch is on the 11th and 18th of November. Remember, when you key in to submit for SkillsFuture, you will only key in the first course start dates, and then you got to submit and make the payment of SkillsFuture of $160.50 before the class start, okay? And then just let you know this, the combination of the course is on the 2 evening and then 2 Saturday. So 2 evening is for on the 11th and 18th November, 7 p.m. to 10:30 p.m. And then the 2 Saturdays on the 13th and 20th November. And on Saturday it's 9 a.m. to 4:30. And then followed by the other batch is the same configuration. Then on the month of December, 2nd and 9th of December, first 2 evening will be the, I think Thursday evening, 7 p.m. to 10:30, and then followed by the 2 more Saturday on the 4th and 11th December. That will be on 9 a.m. to 4:30 p.m. So you can see these are the two available selections for all your selections. So what you can do here, you can either scan in the QR code, or if not, you just mouse over to the chat. There is a link, there's a hyperlink has been sent to the chat. You can double click on the link and you can do the direct registration from there. So remember, the fee for you to submit is only $160.50. Now, again, let me just also highlight a little bit of the administrative. Most administrative, I think Darren already mentioned that already. Now, when you join in the course, right, I'll go to the Q&A question. There's 2 questions raised. Then join in the course, right, there's 2 prerequisites. Most of it, I think Darren did mention earlier on. Now, you need to have a laptop. You need to have a laptop. You need to have a laptop with the PC webcam. And you're going to switch on the webcam throughout the session, except tea break, except lunch break. So if you today you have a desktop, but you don't have a you don't have a PC webcam, please go and get one to attach to your desktop, right? Try not to use your handphone to sign in, right? Because you're going to use it for whole, let's say for 2 Saturdays, a whole 8-hour session, right? So please use the PC laptop to sign in, right? Now, again, this is the course, it's an online class. I think what Darren did mention earlier on. If today, if you are facing a challenge how to navigate the laptop, you don't know how to go to Google to search any of the companies, so on and so forth, I think this course will be very challenging for you, because lifetime income mastery course there is also we call it like a case study submission. There's a competency test, there is an assessment submission during the class. There's not after the course, it's during the class. So course participant got to submit the 11 assessment, even case study, or even the e-learning. We also have a small portion of the e-learning need to be complete by the last day of the class. So these are the 3 different components that require all the course participants to fulfill to do the submission during the class, except the e-learning. The e-learning, you can do it during the last day of the class before 11:59 p.m. right? The rest you got to do the submission during the class. And also what Darren just mentioned earlier on, it will be good that you are good in your Excel, because in this class, our lifetime income mastery course, we're using a lot extensively on the Excel, right? So this is actually a prerequisite, right? And of course, like I said, you got to switch on the webcam, right? So if you are challenging to show your face, to the class, then I'm so sorry, then you are not suitable for the class, because the course itself is an IBF 90% course. So you think of it, 90% of the course fee, $1,044.50, right? This is already pre-funded for you already. What does it mean pre-funded? Which means that you need not to take care of the 90%. CyberQuick will take care for you to arrange with IBF already. You only pay the $160.50. Now, this pre-funded scheme is only happened last year after COVID. Our lifetime income mastery course, we've been running for past 4 years already. So in fact, last time we ran our class before COVID, right? Course participant got to pay a full course fee. That means you're going to pay a full course fee, $1,006.05 with GST. And if you are 40 years and above, right, you claim back 90% of fee, which is you claim back this 144.5 after the course completion. Then if you are 40 and below, you only can claim back 70% after the course completion. So that is last time. So last year, because of last year of the COVID, right? So IBF particularly come in to make it much easier for the course participant, for Singapore citizens or Singapore PR to enhance their so-called the learning skill, and therefore we work out a scheme called pre-funded scheme. So which means the 90% straight away pre-funded for you, right? You only need to pay the remaining unfunded fee, the 10%. So that's how government going to help out for citizen and permanent residents. So that's the reason why myself and Darren keep emphasis, try to enroll, try to participate for the last 2 intake for the year, because next year onwards, you're going to pay double of this 160. Next year onwards, you're going to pay $321 already. You use 160.5 times 2, you're going to pay $321 from 1st Jan 2022 onwards. And then this is already a confirmation. It's a very certainty from the IBF, for Institute Banking of Finance, right? The video I played earlier on. So again, now, the other good news is, if today, if you are NTUC member, you can even use your UTAP credit to pay for this cost. But the different thing is that you got to pay upfront the $160.50 via PayLah, PayNow, or online payment to Cybercode. When you complete the course of lifetime income mastery course, then you go to NTUC to claim back 50% of this course fee, which is $80.35. You can't claim back the full of the this 10%. You only can claim back 50% of which. This one is set by the NTUC funding, UTAP funding. So now, if today if you join in, you are a citizen, and you also have the SkillsFuture credit. At the same time, you also a life member, NTUC member. Then obviously, SkillsFuture is the better choice, right? Because you can use the full of the 10% of the course fee to make payment, right? Okay, right? Hope that I understand to explain to you, right? Now, let me just go back to a question. There's about 3 questions raised. Okay, what payment do we make the 4-figure? Okay, nominees attendee, you didn't list the name, unable to get your name. Okay, so we're talking about what payment do we make? Okay, the 4-figure. Okay, the figure that you pay is 160.5 with GST. You see, I've just circled this one. This is the provided you are Singapore citizen or PR who are residing in Singapore. I believe most of you are, right? Then if you, let's say, if you are non-PR or non-SC, then the payable fee, we still welcome you, but the payable fee will be a full cost fee with GST. That will be $1,006.05. It's indeed, last 2 intake, we have one customer, we have one course participant who pay a full cost fee, because the lady, she's neither a SC or neither SPR, so she's not fall under the 90% funding. So as long as you are Singapore citizen or Singapore PR, above legal age of 18 years old, you're residing in Singapore, yes, automatically you fall under the 90% subsidy, the IBF STS enhanced 90% subsidy. Okay, right? So each day is 2-day course. No, I think you look into that. There is 2 evening, right? November 11, 18 is a 2 evening. Plus, you see, there's a plus, plus another 2 more day on the 13th and 20th November. So there's 2 evening plus 2 Saturday. So 2 full day plus 2 evening. So you, in terms of learning hour, you go and calculate, right? So it's about total 18 hours. 2 full day is 16 hours. 24 hours. 2 full day is already 8 plus 8 is already 16 hours. Then plus another, let's say 3.5 hours here. So it's close to about 24 hours already. Likewise for December also. Okay. So it's 2 evening and 2 Saturday. It's a plus. You see here, there's a plus here. Okay. So will there be a replay link if could not be attend the evening session? Okay, good question. Now, yes, thanks for this question, although you didn't list the name. Now, I think we did mention to all, when you commit on either on the November batch or either on the December batch, right? So once you commit on the date, try to weaken out your errand for these 2 evening and the 2 Saturday, right? But cases may happen. There are people may see that, Andy, last minute, I have an urgent thing happen in the family, some reason, health issue here and there, we're getting to a class start, right? We understand that. We also understand that. So let's say cases happen, is you can show proof, the documentation proof that you're unfit to join in. Let's say of the 2 evening, you only can join the let's say the 2 Saturday, then the other 2 evening you can't join. Then of course you have to show proof your your documentation, right? And then we can make arrangement for you for the receipt on the next batch, the next following batch, right? Okay. So, but of course, once you commit on the day, please, if you don't have any other thing, please commit that, right? Don't try not to so-called to make a different arrangement again for the 2 evening and 2 Saturdays, right? Okay, so thank you very much. Okay, you're Singaporean, definitely good. Singaporean, you can use Skill Future Credit if you have not used up your Skill Future Credit. So once again, let me just come in to just emphasize again. So what are you learning? What are you learning? Of course, you can see the what call it, the slide is provided for you for the registration. So indeed, what will be learning? What are you be learning from our lifetime income mastery? Because today, REITs topics is only one of the topics that which I think Darren just go through with you, right? You are only go through one of the topic of the 9 module. There are total 10 modules. Remember, Darren went through with you. So you're learning a multi-asset portfolio, right? You're learning a multi-asset portfolio, stocks, bond, REITs, which is today you cover the REITs, right? Unit trust or even insurance, right? Right? And also you're learning a portfolio management and as well as the risk management skill. So there's a lot of people when it comes to retirement and then they neglect this portion, right? So especially the risk management skill. So this is something that you learn from lifetime income mastery course. But of course, insurance investment, this is also one portion also. CPF insurance is also one of the portion you're going to learn. And personal finance and retirement planning, this is also very important, right? As an individual, you retired, you do have a retirement planning. So this is the course, lifetime income mastery course, that you learn the whole suite of the multi-asset portfolio, how Darren Chew are going to teach you during the whole full suite of course. So that's actually spelled out very clearly that all of you here should take this last chance that given this opportunity for all of you to join in. Now, if I were you, just select one of the date, either select on November or either select on the December, right? Because this will be the last 2 intake for the 90% funding. So after which will be back to the subsidy will be back to 80% funding. So 80% funding, which means cost participant, you're going to pay double of this $160.50, which is $321 with GST when you want to join in after next year, 1st Jan of 2022 onwards, right? That's where the reason why myself and Darren keep emphasis, want you to join early. Now, again, people might say, Andy, what if, since you see, I saw there's a company sponsored. So let's say, how different is that? Or maybe can I use my company? Can I get my company to pay for it, right? Now, again, of course, definitely, since it's listed in the slide, I also explained to you, an individual, if today, if you join the course, you don't want to use your own money to pay for it, right? You want a company to pay for it, jolly well, you can do that. Of course, there is certain criteria. You have to ensure that your company, your learning department team, aware and give you a green light to attend for this lifetime income mastery course. Then what you can do here, you see the fee payable is different. You could pay upfront $255 with GST to Cybercode via PayLah, PayNow, or online payment, and then you claim back this fee of $255 with GST from your company after the course completion. But let me just highlight to you, we've been running our lifetime income mastery course for the past close to 4 years plus, right? I would say only maybe 0.05%, people will use under the company sponsor, because when you attend this lifetime income mastery course, you're going to learn your own personal skill set. So therefore, most of individual, they join in under the self-sponsored scheme, which is under this scheme, right? The $160.50, right? Okay. So remember, the fee payable for today, when you join for the course here for lifetime income mastery course, the fee payable will be $160.50. Remember, I went through with you, for those who are using Skill Future Credit to make payment, you only pay $106.50. You key in 160.5. For individual who are joining as a permanent resident, then you're using this PayLah, PayNow, or online payment, right? Of course, now you know PayLah, PayNow are so common, or even online payment, we accept Visa and MasterCard payment. You just select one of them. Remember, for those who are using Skill Future Credit to make payment, you got to attach the cost registration form as a supporting document, which is I just run through with you earlier on, right? Okay. So let me see. There are some questions coming in also. I have work commitment every Thursday evening. Next batch also will have a great problem. Definitely, anonymous attendees. If you look through the combination of the how should I say, the format of the course, right? It's running on every Thursday, two Thursday evening, and then 2 Saturday. So take for instance, you have work commitment on the Thursday evening. You may have to make arrangement with your work, right? Because I mean, even we run it after next year January, which is going to pay a higher cost fee. The combination will be the same also. It will be two Thursday evening and then 2 Saturday sessions. So I think back to this attendee who asked this question, then you may have to make arrangement to with your company, with your boss, or with your colleagues, or working colleagues, to excuse yourself for that 2 evening to cover you, for your work commitment, right? Because our next session also will be the same commitment, will be the same 2 evening session, right? Hope to answer your question, right? Because you're learning, right? I mean, once you come to learning, you got to do a sacrifice. So you're working, then no choice. That's only 2 evening already. It's not a two week evening. It's only 2 evening already. Okay, right? So someone was asking a question. Is basic knowledge of the Excel? Yes, definitely. If today you join in, I think like what Darren mentioned, we need not you to know all the programming using Excel. Not after that level. This is not a programming course. It's very much on a simple understanding using Excel is good enough, right? I mean, for those who have an advantage on the using Excel, I would say that would be the it's a plus point for you, because of course, of our course, case study, personal finance, or retirement planning, using a lot of Excels, during the class for submission. So I think if any individual for course participants who are very well versed on that, then it will be a plus point for you, right? Okay. So yes, I think if any of you still have any more further questions, yes, take this last 5 minutes here. Now it's about 9:30 sharp. So I'll open up for another 5 more minutes, sorry, for all of you here to pour in the question. Now, if you do have question, take this last 5 minutes here to post your question into the Q&A, right? Q&A, then I can answer your question accordingly. Now, bear in mind, highlight to all, I think Darren also did highlight to all with you that this course, the 90% funding scheme going to expire on 31st of December. So I think taking this last opportunity, last chance for you to select, like I think one of the candidates were asking, if you have working commitment on the Thursday evening, I mean, you have to find ways, right? You have to find ways to make sure the 2 evening you can make it. I mean, if you tell me you couldn't make it for Thursday, I mean, the Thursday evening, our next batch will coming out on the next year, 2022. It will be the same format as well. It will be 2 evening, Thursday, two Thursday evening plus the 2 Saturday. So I think with that, I think participants who you really have a commitment on the weekday, please, then you have to make arrangement with your work arrangement on that, because it's only 2 evening. It's not a two consecutively week or something like that. It's just only 2 evening only, right? For those who are ready, please take this last chance, scan in the QR code and to register, right? So let me just type also one more time again to the link, right? Lifetime Income Mastery course link. So yeah, I think this is the last moment for you to enjoy the what do you call it? This 90% funding, right? Okay, let me just start here for the registration. So if all of you ready here, please take this last chance to register. Okay. God, no, why? Okay, I type again one more time the hyperlink to into the chat, right? So Lifetime Income Mastery course, right? Now the good piece I need to share with you also. I think the team of Darren, this Lifetime Income Mastery course here, very fortunate. Darren, as a sole trainer, he also has the 2 more assistants to help out during the class of Lifetime Income Mastery course. Is also a qualified trainer to provide to train together. So in fact, during the class here, you are facing any difficulty, there's still 2 more assistants from the Darren team to assist along the way. So I think that is actually give you a very strong reason. Shouldn't be too worried. Like the candidate were asking whether simple Excel. Yes, simple Excel is good enough already for you to participate for the Lifetime Income Mastery course. Okay, all courses by IBF have 90% subsidy. Chun, you asked a very good question. IBF course currently with CyberCode, we have about close to 6 to 7 different IBF accreditation courses. Apparently, IBF accreditation courses as for this year is still 90%. We call IBF STS Enhanced Support Scheme. And then next year onwards, right, it will be fall back to 80% subsidy, right? So back to your question, Chun, it is, yes, currently it's still 90%, right? Okay. So once again, strongly urge all of you here to take this last chance to enroll, to register yourself a seat, right? Remember, next year of January 1st, 2022, right? Very soon, less than 3 months from now. Now today already 19th of the October already, right? So very fast that you can see that another 2 more months, New Year coming, so the cost payable fee will be much higher. So we want all of you here to pay lesser, to join in the cost of the lifetime income mastery course, and as soon as possible, right? Okay. And if any of you do have any other question, or yes, take this last chance to post your question in the Q&A, anything pertaining to the cost arrangement. Now, any question for Darren? Let's say I am unable to answer you, I can always relate back the question from Darren, and then I'll reply you in a thank you email, because at the end of the live webinar, I'll still send our thank you email to all as well. Okay, there's one question coming in here, or no, it's all answered here. Okay, all the questions all answered. So any last one more question, 1 more minutes to all of you, you're online. We have still about close to 20, 15, about close to